Oaktree Capital Management is a global asset management firm specializing in alternative investment strategies. Oaktree emphasizes an opportunistic, value-oriented, and risk-controlled approach to investments in distressed debt, corporate debt, control investing, convertible securities, real estate and listed equities. As of December 31, 2012, the company managed $77.1 billion, primarily on behalf of pension funds, foundations, endowments, and sovereign wealth funds. On April 12, 2012, Oaktree Capital Group LLC became listed on the New York Stock Exchange, (OAK). The firm was co-founded in 1995 by a group who had formerly worked together at the TCW Group starting in the 1980s. Oaktree quickly established a reputation in the high-yield and distressed debt markets. As of 2012, it has over 700 employees and offices in Los Angeles, where it is headquartered, London, New York, Hong Kong, Stamford, Tokyo, Luxembourg, Paris, Frankfurt, Singapore, Seoul, Beijing and Amsterdam. Firm overview. With headquarters in Los Angeles, the firm has over 700 employees and offices in 13 cities worldwide: Tokyo, Luxembourg, Paris, Frankfurt, Singapore, Seoul, Beijing and Amsterdam. Investment philosophy. Oaktree has a value-oriented investment philosophy, emphasizing risk control, consistency and specialization, with a focus on opportunities that offer a margin of safety. On November 12, 2011, the Financial Times said of Oaktree unregistered trademark S approach, a at heart of risk management Oaktree style, with its emphasis on living to fight another day, is simple. Oaktree does an unregistered trademark to use leverage and eschews overly complicated hedging strategies. The firm specializes in off-the-beaten path and contrarian investments, and favors companies with tangible assets. The firm's motto is if we avoid the losers, the winners will take care of themselves. Investment focus. Oaktree invests across the capital structure, with an emphasis on senior debt in companies and markets where it has what it calls a knowledge advantage. Distressed or otherwise ailing companies, according to Oaktree, provide such opportunities. The company unregistered trademark S chairman, Howard Marks, has been described as one of the savviest investors in the world, and is known in the investment community for letters to investors called the Oaktree Mimosa. Since its 1995 formation, Oaktree has become the largest distressed debt investor in the world. In 2008, it raised $10.9 billion for what was the largest ever distressed debt fund, its Opportunities Fund Vibe. As reported in the Washington Post on June 26, 2011, Oaktree unregistered trademark S17 distressed debt funds have averaged annual gains of 19% after fees for the past 22 years. In addition to credit investments in distressed debt and high-yield bonds, Oaktree also invests in areas such as private equity, real estate and listed equities. In recent years, the company has expanded its real estate activities. Investor base. Oaktree unregistered trademark S investor base primarily includes pension plans, endowments and foundations, and sovereign wealth funds. 100 of the 300 largest global pension plans, 75 of the 100 largest U.S. pension plans, 39 state pension plans, 312 endowments and foundations, and 10 sovereign wealth fund nations. According to the Wall Street Journal, Oaktree has long been considered a stable repository for pension fund and endowment money. The company unregistered trademark S distressed debt funds are often oversubscribed, and in 2010 Oaktree turned down potential investors due to self-imposed limits on fund size. By law, clients are required to be so-called accredited investors. However, sub-advisory relationships with mutual funds such as the Vanguard Group and Russell Investment Group provide smaller investors access to Oaktree unregistered trademark S portfolio managers. History. Early years. Oaktree was founded in 1995 by a group of principals who first joined together at the TCW Group in the mid-1980s to manage high-yield bonds, convertible securities, distressed debt and principal investments. Within 3 months of its founding in 1995, a Euro more than 30 TCW clients transferred $1.5 billion in assets to Oaktree Euro, adding to the original asset classes. Oaktree Euro unregistered trademark S investment activities currently include other complementary strategies. What it refers to as its Euro synergistic Euro investment strategies include specializations in power infrastructure, mezzanine debt, and senior loans. As of March 31, 2012, its assets under management were $77.9 billion. Oaktree has formed various sub-advisory relationships since 1995. In 1996, Oaktree was selected as the sub-advisor for the Vanguard Convertible Securities Fund. Since 1995, Oaktree has created what it refers to as a Euro step-out Euro strategies, usually coincident with the opening of new offices around the world. Its growth in strategies has largely focused on expanding into European and Asian markets. Between 1998 and 1999, Oaktree created 3 new strategies: Emerging Markets Absolute Return in 1998, European High Yield Bonds in 1999, Power Opportunities in 1999. Oaktree was one of the first U.S.-headquartered alternative asset managers with dedicated European investment teams focused on credit expansion. In 2001, Oaktree continued to introduce new step-out strategies, starting with mezzanine finance. Asia Principal Opportunities and Asia Special Situations followed, along with European Principal Opportunities, European Senior Loans, U.S. Senior Loans and Value Opportunities, and Emerging Markets Equities in 2011. In 2005, the Securities and Exchange Commission ordered Oaktree to pay a fine, interest, and disgorge profits after the SEC ruled they had sold securities short before the 5 legal business days after a public offering pricing had gone public. Oaktree was required to put in place policies and procedures to prevent violations in the future. In 2008, the firm raised $11 billion for their distressed debt fund. In 2009, Oaktree was selected by the U.S. Treasury, along with 8 other managers, to participate in the governmental Euro unregistered trademark S public-private investment program. At the time of Oaktree Euro unregistered trademark S inclusion in the PPIP program, the New York Times reported, a Euro Howard S. Marks is the sort of financier who Washington hopes will help fix the national Euro unregistered trademark S tumble-down banks. A Euro partnering with Oaktree in PPIP are the Inupiat Eskimos of Alaska. Euro unregistered trademark S North Slope, whose Arctic Slope Regional Corporation invested some $10 million alongside Oaktree Euro unregistered trademark S PPIP fund. As of December 31, 2011, the Oaktree PPIP Fund, LP had a gross return of 17.8%. Recent years, relationship expansion. In recent years, the company has formed several strategic relationships. In 2009, Oaktree acquired a 22% stake in Double Line Capital, a Los Angeles-based investment firm specializing in mortgage-backed fixed-income portfolios. In 2011, Oaktree partnered with Sable Financial Group, a company focusing on the acquisition and valuation of portfolios of real estate loans. Oaktree had been an investor in Sable Euro unregistered trademark S portfolio since 2009 prior to acquiring a non-controlling equity stake in the company. Its relationship with Vanguard was expanded in 2011, when Oaktree was selected as one of 4 firms to manage Vanguard Euro unregistered trademark S Emerging Markets Select Stock Fund. In 2010, Oaktree was named one of 3 advisors to the Russell Global Opportunistic Credit Fund and was selected as a manager for the Credit Suisse I Fund in 2011. European Sovereign Debt Crisis. Seeking investment opportunities created by the European sovereign debt crisis, Oaktree started its European Principal Fund 3 in November 2011 with committed capital of some $3 billion. Other recent funds, according to the Campania Euro unregistered trademark S published financial results, during the quarter ended March 31, 2012, Oaktree held a first closing for Oaktree Opportunities Fund 9, LP with $1.2 billion. Like its other opportunities funds, Fund 9 will focus on a euro market pricing inefficiencies resulting from company reorganizations and restructurings, and the senior and secured debt of operationally sound, over-leveraged companies in the United States and Western Europe. A New York Stock Exchange listing. On April 12, 2012, Oaktree became a publicly traded partnership with shares listed on the New York Stock Exchange. The company was previously listed on GSTOUE, a private over-the-counter exchange run by Goldman Sachs which officially ceased operations in 2012 after Oaktree, along with Apollo Global Management, delisted and moved to the New York Stock Exchange. Investment funds. Oaktree unregistered trademark S. Current investment activities are divided across 6 main asset classes: distressed debt, corporate debt, control investing, convertible securities, real estate and listed equities. Fund structures within each asset class vary, and are organized into closed-end, open-end, or so-called a Euro or evergreen Euro fund types. Oaktree unregistered trademark S fund offerings are organized into 3 broad categories based on liquidity and lock-up period. Closed-end funds. Closed-end funds are structured as limited partnerships that have a 10 or 11-year term and have a specified period during which clients can subscribe for limited partnership interests in the fund. Closed-end funds have a 3, 4 or 5-year investment period. Open-end funds. Commingled open-end funds are structured as limited partnerships that admit clients as new limited partners on an ongoing basis. Unlike closed-end funds, these funds do not have an investment period. Capital may be committed to new investments at any time during the fund or Euro unregistered trademark S life. Evergreen funds. A Euro OE evergreen funds Euro invest in marketable securities on a long and short basis. Like open-end funds, Oaktree Euro unregistered trademark S evergreen funds accept new capital on an ongoing basis. Clients in evergreen funds are generally subject to a lock-up period of between 1 and 3 years. The following tables list the Campania Euro unregistered trademark S strategies and funds since inception: closed-end funds, open-end funds, evergreen funds, assets, current as of December 31, 2012, current investments. General Maritime, oil tanker line utilizing foreign vessels and crews headquartered in New York, are under Ice Cream a European ice cream producer based in the UK, Sky Holding a Eurojet airplane ownership, Varese de la Euro unregistered trademark Orna Coucher copyright a Euro glass etching firm a April 1, 2010, Campoffer O Food Group a European food industry, Conbibel a Italian fashion industry, aluminum manufacturing, Aleris International a acquired May 1, 2010, Almatis Group a acquired 2010, Media, Triton Media Group a Media Group managed by Oaktree Capital, Town Square Media a broadcast station and local media company owned by Oaktree Capital a acquired April 1, 2010, Cumulus Media a in October 20, 2011, SEC filing by Oaktree Capital shows that it has purchased 3,985,983 shares of Cumulus Media stock, giving Oaktree Capital a position currently valued at $11,320,192 in the radio operator. Tribune Company a acquired jointly with JP Morgan Chase and Angelo, Gordon and Company. Acquisition completed July 2012. Manufacturing. Advance Pierre Foods a food manufacturing company with facilities in Iowa, Oklahoma, Ohio, North Carolina, Maine, and South Carolina. See also, category, Oaktree Capital Management, references. Further reading, 2011, The Most Important Thing, Uncommon Sense for the Thoughtful Investor by Howard Marks, external links, official website.